it seems that the relationship between central banks and clear words is not actually a straightforward one. Because, I mean, that has to do with the fact, as was mentioned this morning, that whatever central bankers say can be hugely powerful for the economy, for markets, for the wealth of people, for the stability of the currency, for the stability of banks, and so on and so forth. And that is why central bankers, when they talk, they've been kind of disciples of Spider-Man. Yeah, here I mentioned it. Because with great power comes great responsibility. And that is why they tended to not really communicate a lot, and if they did, in highly cryptic terms. You have here on the left a former governor of the Bank of England. That was basically the idea that you don't explain, you don't apologize. There's another quote that says, it's a dangerous thing to start to give reasons. And this whole, the role of the communications department of the Bank of England was to keep the bank out of the press and the press out of the bank. Now that has of course changed massively with the arrival of communication actually as a tool of policy, and all the way to what you see here from Christine Lagarde, our current president, saying that it's the basis of our credibility. At the same time, it has to be said that central banks tended to communicate basically with someone that the former chief economist of the Bank of England used to call MEN, M-E-N, markets, economists, and news agencies. These were our target audiences because that's how our monetary policy was transmitted via financial markets. Now, that was the case, but times they are changing, in the sense that we have a new president who put closeness to citizen and being able to actually interact with the people whom we serve at the heart of her own agenda for her presidency at the European Central Bank, an 8-year mandate. And as part of that, she made sure that communication was part of a big strategy review that we have done for the first time since 2003 in the last couple of years, 20 to 21. And as part of that, the entire Governing Council, so all the governors of the national central banks of the 20 Eurozone countries, now 20, then 19 countries of the Eurozone, agreed that we've got a shift in our communication. We've got to move to explaining our monetary policy as clearly as possible to all audiences, not just to the infamous MEN, but to everyone. And for that, we got to speak more clearly in the way we communicate our core policy. We've got to have a narrative with it, and we have to have that layered complement to it that basically distills from a communication that is still destined for markets, but is still better written, to something that the wider public can understand. And I want to talk a little bit about what that actually meant. Now, in this new style monetary policy, it's not only shorter. We used to have an introductory statement that was at the beginning of the press conference every 6 weeks when the ECB takes monetary policy decisions. We have moved to something which we call the monetary policy statement, and really went line by line to say, what is it they're really trying to say? And actively moving away from jargon. Instead of saying the annual growth rate of real euro area GDP, we would simply say, the economy grew. Instead of saying, you know, employment grew robustly, we're trying to say more people are having jobs. A conscious effort to put not abstract variables in the center. Economists tend to describe the economy with reference to various variables to tell us what's going on in the economy. But to actually say, what does that mean? That means that, you know, kind of businesses and families find it harder to get credit because interest rates are going up. Credit's more expensive. Just say what it is rather than saying a kind of, you know, the interest rates for business credit has gone up. Say what it is. It's become more expensive. And so there's a few things that we were trying to bring in there that are that weren't there before. A second big point there is, we spoke earlier in the morning about empathy. Inflation is not just a number. Inflation has, and that's the topic at the moment, is painful for a lot of people. And to actually get around to saying, and not just saying, well, Eurostat has calculated inflation at 7%. No, inflation is too high, it's too high for too long, and it's painful. And to move for a central bank to that language has been quite a shift. And we're trying to pursue that, and I can tell you it's not a straightforward thing. Now, the one thing we spoke earlier a bit about measurement. I come from the central bank, and we're surrounded by economists, and the one thing that does speak to everyone there is numbers. And so we a lot the numbers speak, and what we're using is the standard readability statistics that you find in the normal Word package, and we run them through our statements. And here you see what has been achieved with the kind of the innovation in the monetary policy strategy review, from an intro statement that you needed a PhD to understand, to something that is understandable with baccalaureate level, or maybe just a little bit above. As you can also see, as the blue lines develop, after the initial enthusiasm, there is, of course, the powers of inertia are striking back. And it's very difficult to keep it in a range where we're saying that's where we would like to be. So both in terms of the complexity, but also in terms of the readability. Of course, we are nowhere near plain language. That is probably also just not achievable, but we can try to be a lot better than we used to be. We all probably know about the various statistics that you can use, the measurement, the metrics. None of them are, of course, perfect, and they can be gamed and so on and so forth. But I think as a ballpark figure where you stand and where the trend is, they're very helpful also in the discussions with the colleagues. Now, we also committed to a complement, which is kind of this layered version, which we call our monetary policy statement at a glance. And that really puts down the core messages. What did we decide? Where's the economy going? What's going on? What are our main points? And then we try to bring in, of course, in a way that is readable on mobile devices and so on and so forth, in all languages, intuitive, visual, and just one or two lines that tell you what is it that we're doing. So, and we're producing this every 6 weeks. It comes out basically an hour at the end of the press conference, an hour after the main statement has come out, in all 24 languages, to just say this is really what you need to know if you are the average Joe on the street, so to speak. If you're not the market person who has to actually read, let's not forget, we as a central bank are in a very privileged position that a lot of our stuff needs to be read by people who make or lose money if they don't read it. So we're not actually competing in that sense for attention with that particular crowd. Whereas for the wider public, we are competing for attention, let's face it. And that's why we need to have something that is a bit more attractive and a bit more visual. And with this one, I'm proud to say we are achieving plain language. It's 250 words on average. We are in plain language, and you need around 13, 14 years old, so 6th, 7th, 8th form in school, you should be able to understand what we're trying to say there in this. Now, one reason why I think it works is because also precisely the language that we use. There's a lot about people in there, which you don't actually have in much of the other statements. Whereas, of course, it's about the economy, it's about inflation, it's about prices, but we're trying to bring in things that relate to people and that kind of make that a connection. We find, of course, we're pushing it out on all sorts of social media channels. We have it on our website. It goes out on social media channels of our own, of that of Christine Lagarde, of that of the national central banks. And we find from the behavior of people who look at it that these are truly non-experts, and we see there is a sustained interest after we've taken the decision. Many of the experts and the market people want to see it on the day, whereas this is a kind of a longer burning thing that we have there. And we're particularly proud, if you know, kind of imitation is the greatest form of flattery, that people elsewhere have produced something that looks remarkably familiar. With what we're doing here with colleagues at the Central Bank of the Bank of Japan, with whom we have been in long discussions, and you see that that obviously that is an example that is being emulated. Now, just to give you a little bit of an example of how we get there, so there is a process of a drafting team that works on an initial expert draft, and then you see some of the numbers. The grade level is how sorry, you mix them up here. Actually, is the grade level is the 12 here, 12, how many years of education it needs and how close you are to the 60. And then you see that basically as we move in the drafting, it becomes easier to understand, easier to read. And then as we move into the visual and what we call the monetary policy at a glance, you see that some of these super complex things can simply be broken down into something that's much more understandable, all the way to the hopefully intuitive visuals that you see there. It's about people and jobs and money and their wages and their wallets. So that's kind of the idea that we're trying to get through there. My final, well, almost final point, sorry, is this one, to say, well, you know, how difficult is it? Because I was also asked, you know, how difficult is it? Well, we have to recognize that a technical issue like central bank policy and the impact it has on markets needs nuance, needs precision, and sometimes that needs complex words. But sometimes the nuance is such that only 5 people understand it, and those 5 people are actually in the room. And so you need to take a step back and say, do we really need to do this? And that's kind of a continuous discussion. But at the same time, there's very genuine concerns. There's very genuine concerns. We cannot pretend the world is simple when it's not. And some of our instruments are complex. The situation that we're in is complex. And if we say it in very simple, but if you say it in simplistic terms, and that's the whole point, it's to be simple but not simplistic, then we might create a wrong sense of certainty that's simply not there. Or even worse, a perception of our own power that is not actually within our power. As a central bank, when we speak about climate change or something like this, we can talk in easy terms about what we do, but we are not in charge of climate policies. Some other people are, and that's very important. Now, the way to move forward is the support from the top. I've shown you Christine Lagarde, who is very keen on this. But as I said earlier, it's the numbers. We're in a continuous process of showing how we're doing with these kind of statements, how it can be done better. And I think this is something to simply create a transparency when the text is out on the table and say, look, really, if you put this out, you need a PhD to understand that. And I think that's helping a little bit of a reflection process. And of course, is to promote the use of plain language at the source. And here we spoke earlier. We did this, used the International Plain Language Day to do both internally and externally an awareness raising, a visual quote from Christine Lagarde that went through our social media. A colleague and I, we wrote a blog post to say, look, on that day, let's look at, and we show some of the statistics that you've seen here, but also internally, it's sort of some learning experience, and we're basically asking people to do a quiz and deal with acronyms, and by the learning, they realized that, look guys, acronyms are a difficult thing, let's try to avoid those. And we're now thinking what we do this year, because that was last year. Now, the final point is, those of you who know UNO, that is of course a constant challenge that we are facing. I think we've moved a long way. When we started thinking about this, we were confronted with issues like we were doing the infantilization of monetary policy. We're doing Mickey Mouse economics, and that's not what a central bank ought to be doing. If you want to do graphic things, that the newspapers should do that. But gradually we're getting around to this idea that if we don't do the simplification, someone else will do it, probably with different intentions, or even to talk their own book. And I think with this way, we are in this continuous process to try to convince our colleagues that you can not upset the markets, you can get your message across without being super, super technical. And that's what I wanted to share. Thank you very much.